All right, guys. I see our first guest hanging out backstage. My man Sean Deckmar. It's been a while since we've had him on Benzinga's stream. Usually streaming on his own channel or to his own group, but I believe takes Fridays off, or at least in the afternoon. So lucky enough to get Sean to join us today. Let's go ahead and give Sean our very special Zinger Nation welcome. Roll that intro, and we come back. We'll be talking to Sean about what stocks he's been looking at and what he's been trading. What is up, Sean? Welcome back to Benzinga Live. How you doing?
Good. How you doing, man? Thank you so much for having me.
Good. So, what's new? How's your trading been in the new year?
Everything's good. I mean, going into 2023, I'll be the first one to say I am so happy and so excited to be going into 2023. I think I can speak for a lot of people that says, hey, 2022 is over. Let's head into this new year. Let's make it the best year yet. 2022 was a very tough time. And I'll be honest when I say it was nowhere close to one of my best years ever. I finished off in the green, but it was a year that I was honestly just saying, hey, let's get to the end of this and let's start fresh with 2023. So the market's been a little crazy. We're starting to have a little bit of a bounce right now. But to be honest with you, I still think there's some more downside ahead. I still think we're going to be having some drops and could be seeing a brand new 52-week low within the first 6 months of the S&P 500, and then maybe the back half of 2023, we could starting to see a little bit more of that bull rally.
Yeah, and I mean, I think a lot of people have been antsy for this bull rally, and honestly, I don't think it's even just retail. I mean, I know a lot of institutional and a lot of big banks have still had money like parked on the sidelines, really going back since. I think a lot of people took money, a lot of big players took money off the board, when the COVID markets got a little crazy, thinking, okay, maybe we've made some good money here. So what do you think we need to see? I mean, a lot of people obviously are pointing to the Fed and saying, okay, when the Fed starts cutting, but what are the signs you're looking for in the market before you can really go like full bull?
I mean, basically, what you've already been stating is that it really does come down to it's impossible for the markets to climb while we're still raising rates. It's just a simple cycle. And, a lot of people say, don't try to time the market. And I understand, don't try to time the market, but you can time the market in some sort of sense when the same things happen cycle and cycle and cycle over again. So many people move into the brand new year and we expect to see some sort of different result. Everyone says to themselves, hey, 2023 is here. Let's see this market go all the way back up to 480. Let's see it go all the way back up towards pandemic highs. The thing is, we're doing the same exact thing that we had last year. If we continue to raise rates, let's expect to see the same exact results. Something I tell my chat all the time is, imagine if we woke up every single day in 2022, we ate candy bars, ate ice cream, we went to sleep, played Fortnite. All we did was sit there. And by the end of the year, we were a huge, person, super overweight. In 2023, we could say, hey, I want to be skinny. Hey, I want to be in shape. But if we do the same exact thing, keep waking up, eating ice cream, playing Fortnite, we're still going to look the same. Same exact thing with the market. We raised rates, 8 times last year? We are going to raise rates probably another 3 times at least, starting off, 2023. I'm not expecting to see any sort of market direction on some sort of different trend than what we're already on at this time. The S&P 500 is continuing to fall. Rates are going to continue to rise. After we have rates, we have to pause rates. And then from there, we are going to be finally cutting rates where Jerome Powell doesn't expect any cut rates to be happening until we head on over to 2024. Some people expect that may be a lie. They may be thinking we're by about like October or November, we may start cutting rates. But regardless, we aren't going to see that really true bull run until we start seeing at least pausing rates. And then on top of that, cutting rates. In my timeline, I'm expecting that the final rate hike is probably going to be in May. I think, again, we're going to be pausing rates over the summertime. And it's kind of up in the air if we are actually going to be cutting any sort of rates before we get into 2024. But as this market continues to fall, as this market continues to drop, there's no part of me that wants to be buying in just yet. I'm not not going to FOMO in at this time when we still have more rates to cut and we're just still slowing down the economy. But the big thing that we also see a lot of times is Google today. Google just announced that they've had so many different layoffs. We've seen Microsoft have layoffs. Some other big blue chips are having layoffs. And we are going into a very crucial time this week, which is going to be earnings reports, into next week's earnings reports. And then on February 1st, we have the Fed first rate hike. So a lot of people got excited about this last 7-day bull rally that we saw to kind of kick off this year. But this is starting to turn. And especially as we're starting to get these earnings reports coming out right now, things are not looking as good. And banks have already kind of kicked that off, showing that these numbers aren't that great. And could you imagine if we have, let's say, the next 2 weeks of bad earnings reports just to top it on off with some bad rate hikes coming on up, in about 2 weeks on February 1st. So I'm still thinking, market's going to be dropping for a little bit until we, again, really have that clear cut. Rates are being cut. And that's where, the true bull market, would really start. And that not only goes with stocks, but also, Bitcoin and cryptocurrencies. You were talking about those earlier. And
Right.
it's one of those things that I think we all know, especially as an experienced trader, what to look for. But the hardest thing to control is going to be right here. Seeing, again, Tesla down towards $100, seeing, some of our other plays, NVDA or Amazon or Meta or, Apple down towards areas where we say to ourselves, man, this is a juicy area. This is an area that I would love to be able to jump in. But I can't pull the trigger just yet. If you do pull the trigger right now, I can understand why. I get it. I'm not saying it's a bad entry, depending on if you're holding long term, but I think there is still a little bit more coming on down in the south.
Yeah, and you bring up Google, who again announced layoffs today, but the stock's trading up. I mean, it's up more than 4%, and I mean, we have big earnings coming up. But what if, I mean, like, and I anticipate as well that like companies like Google, big companies, are going to report maybe not so great earnings, or even maybe worse, scary guidance or scary forward looking. But if I see the market reacting this way, right? If I see Apple reporting saying, okay, we're going to sell less phones, less MacBooks this year or whatever, and the stock doesn't take a big hit, I'm going to see that as a sign, Sean, that the market is starting to say, okay, like we're brushing off some of this bad news and saying like Apple at 125 or 130 is a fine buy for the long, whatever. So I don't know if today's action on Google is an anomaly or if that's kind of a vibe shift we're seeing throughout the market right now.
Mm-hmm. Yeah, and I know exactly what you mean, because I always like to, I don't want to be biased. I don't want to, just because I have my opinions, I don't want to impose them on other people. It's saying to other people, oh, don't buy in, don't get involved in this play. Because, a lot of times I might say, hey, we're going to keep cutting interest rates, or sometimes the economy or how the current stock market is doing doesn't always correlate with, let's say, how, the economy is doing. I mean, we could take a look, and a perfect example would be the pandemic. When we had the pandemic, the economy was hurting. People were losing jobs. People were, again, struggling in their everyday life, but the stock market was thriving. So I do always want to try to understand both sides of it. I do still personally believe the market's going to definitely still take a little bit of a hit. I still think we have to go through our normal cycle with, again, raising rates, pausing rates, and then eventually cutting rates. But I can understand your side as well, where we sometimes have, what seems to be bad news. Hey, layoffs are starting to happen. Google's up today. But, one of the biggest things is when it comes down to blue chips, when it comes down to these larger cap stocks, the best thing to do a lot of times is to get into a larger time frame. Sometimes we look into those 1 minute, 2 minute, even on like this exact day of just today, and we say, oh, this doesn't make sense. Why is it doing it? But when you zoom out of the chart and you start saying to yourself, okay, let's not focus on today. Let's focus on the overall month. Let's focus on the overall trend. That's where I just think we have a lot more predictability. When we can be able to zoom out and we can be able to say to ourselves, all right, where's our resistance? Where's our support? And I think that's where we could be a much better trader. I think a big reason why a lot of option traders do take losses, especially when they trade, let's say, the S&P 500 or Apple or Google or any of these plays, is being in the 1 minute chart or just being in the actual day trade of today. It's very difficult to be able to figure out. You have to be a very special trader, and you have to have a lot of studying experience to be able to figure out every little tiny move. But when it comes down to blue chips, it's a lot easier to honestly figure out a weekly move, or even easier a monthly move. There's always going to be those unknowns unknowns. There's always going to be those weird press releases or a different data that may come on out. But I definitely understand your side of it, that layoffs happened today on Google and the market's on up, or again, we're seeing Google on up. That is one of those, tough things about the stock market, which makes it the stock market, where people sometimes say, hey, why is it every single time I buy, the market moves up? Why is it every time I sell, the market, goes down, goes in the opposite way that we want? So, that's, I definitely am taking that with a grain of salt and understanding, your side of it as well.
Yeah, and I think, on the flip side to it is when I think back to kind of around this time frame where my cursor is, like November 2021, when we were starting to get kind of topped out.
Mm-hmm.
If you remember this quarter, like when all the big companies reported this, like, at this time frame, I think like either maybe it was January 2022, whatever, like all their quarters were like record breaking, best all time. And none of the stock, Apple, Microsoft, Google, all literally blew it out of the water. Great quarters. And the stocks didn't really like do anything because I think the market was recognizing, or big players were recognizing, hey, even though Google just had the best quarter they've ever had, we're worried about inflation and the Fed having to raise rates. And so, like, that was like a sign, or I guess in hindsight, I didn't really see it as a sign at the time, but in hindsight, that was a sign that maybe the market was topping out, that these stocks weren't running on good news. So if this earnings cycle, I think, will be pivotal, and if the companies, like I said, I anticipate, and like you said, like, are having tough times, having to lay people off, having to cut costs. And if we hear across the board all the big names say this, and those stocks don't get hammered down, I am going to see that as a pretty bullish sign. But that's not really what I'm expecting. Like you, Sean, I'm going into the earnings season without a bias. And if all those stocks do get crushed on bad reports or bad guidance, I'm not really going to see that as anything other than a buying opportunity on some of the big names. If Google gets back down to like, $80 again, or Apple back down to like 120 or 115, like I don't know, if that means the whole market's going to crash essentially if we do get a bad earnings cycle.
Yeah, no, I agree with that. And that's the thing that I'm saying, right now, for anyone that's getting involved at these prices, I would never disagree with anyone if they said, oh, I'm buying a Google right now. It's down, I don't know exactly how much it's down. It's down 40% in the year. Oh, I'm getting over 2022. Oh, I'm getting involved in Tesla right now. Do you think Tesla's a bad play? It's down, 55%, from last year. I'm getting involved in Apple, down 20%. I don't think any of these are going to be bad investments, long term. We take a look at these companies. Right. Yeah, these companies are amazing companies, and they all are expanding, they're growing, and they've been amazing investments. You can't really go wrong when you are going with, let's say, some of these top 10, top 20 companies. They're going to get their bounces. And when we get back into that bull rally, we will be able to see them go on nice rips. So I don't want anyone to take that out of context and be like, oh, Sean doesn't want anyone buying anything. He thinks it's going to go lower. Wait for those lower prices. I think, again, the best thing to do is, if you believe that these are going to be the best prices we're going to get, start adding a little bit. I don't want you to add everything you have, but you know what? Add a little bit, have some skin in the game. And if you do go lower, then you can add a little bit more and average down. This is not an averaging down position where it's basically, buying into a falling knife. This is not an averaging down position where it's some sort of penny stock that's never going to come back down on you or be able to move back on up. This is Google, this is Apple, this is Tesla. We will be able to see rebounds, but the magic question everyone's trying to figure out is, where will the absolute bottom be? And, a lot of people, the FOMO was already hitting. Oh, I missed the bottom, back in whenever it was June, when we saw the S&P 500 all the way back on down towards 348. That was the bottom. I can't believe I missed that. Now, again, people are saying, well, I don't want to miss it now. Right now, the S&P 500 currently trading up in the 390s. I want to make sure that I'm in on this position before, of course, we cross over towards that 400 mark again. So FOMO is definitely starting to take its a little bit of effect. But I still see, honestly, a very large downtrend. Is there, if I can, Aaron, is it possible if I could share my screen and just kind of show the chart that I have at this time?
Of course.
What I just present and then share screen?
Yeah, present. You can do it by, typically it's easiest to do it like by tab or by window if you have a software or a specific screen, because if you do your whole screen, it can just get a little convoluted and
gotcha.
Jumbled.
Let me see here. Share screen. All right.
Yeah, I'm always curious to see how different people have their chart setups, and like what indicators you use, and really what you're looking for in charts. Because we were talking about it earlier on the show. I mean, it's really like, you're looking at charts like looking at art. Everyone can interpret it different ways.
Absolutely. So this is, I'm just going to make, everyone's life's easy. And I'm just going to start this absolute from scratch start. This is the daily chart right here over on the S&P 500. Let's just right here. This is just bold, straightforward S&P 500 daily chart from the present day all the way back to August of 2021. This is showing all of 2022 right now. And if we wanted to, we can literally just connect the dots throughout 2022. And we can still see that we are on a downtrend throughout 2022. This downtrend is continuously holding. Why would we go against this downtrend? All we have to do at this time, if we want to be as smart as we can as an investor, is if you are a person that is bullish in the market and you're saying, I want the market to move on up, don't we believe that probably the best entry, at least to kind of back up that statement, would be let's wait for a break of the downtrend that has been holding throughout 2022? We have seen one touch, two touch, three touch, four touch, five touch, six touches. And every single time that we have hit this purple line, this downtrend of 2022, we've had a 2.5 month drop. We had a 3.5 month drop. We had a 2 month drop. We had a 1.5 month drop. And we actually just hit this downtrend of 2022 once again last week as we came on up towards around that 400 region. A lot of, again, traders that I know started doing long-term put contracts, about 3-month out expirations, put contracts, S&P 500, SPX, looking for drops all the way back down to 350. Because if we just went off the pattern, that is what is showing us right now. You touch the purple line, you get about a 2-month drop back on down. And until we break this downtrend, that's honestly what we have to stick with. But for the bulls, there is something positive, because I know right now I'm sounding a little bit bearish, saying, oh, I believe it's going to go lower and lower. We have to be able to say both sides of it. So I still do see a very nice uptrend at this moment. Now, this uptrend started forming back in October, and let's just put this in a nice purple line here, where we can see we've gotten our bounces, and we have a clear-cut bounce right here and here and here as we're getting tighter and tighter. Now, what's the best thing about getting tighter and tighter? We are forming a very large wedge pattern on the S&P 500, where, to be honest with us, all we have to do is play this in a very simple manner. We look to buy near the bottoms, and we look to, of course, do put contracts up near the top. Buy the bottom, put contract up at the top. And everything in the middle is going to be a little bit random. When I said that it's very difficult to trade in that 1 minute chart, the 2 minute chart, it is tough, because if someone asked me which way is the S&P 500 going to go right now, I really couldn't tell you. I couldn't tell you if it's going to go up to 393 and drop back down to 391. I couldn't tell you if it's going to go to 395 and go back down towards 389. But what I can tell you is when you get up near the area of 398, you have massive reward and you have low risk. Because if you want to do two different trades, you could do a put contract at 398 with a stop loss at 401. If you break 401, we're breaking the downtrend that's lasted the last 13 months. And there's going to be most likely a lot of bulls that are going to push in on this play. But if you do a put contract and let's say you fall on down, you have massive reward. So you're risking little for, again, a great reward. Same exact thing if you wanted to do a call contract at 383, put a stop loss at the price of 381. If you hit 381, we're cracking that 3-month uptrend. But if, of course, we do get the bounce play, which has happened multiple times previously, that's going to actually bring in a lot of strength. And that's going to lead towards the market being able to move ourselves back on up. So at this time, what I've told, again, all my traders is let's stay away from the S&P 500 until we're either at our top, either at our bottom, or until this wedge increases. I actually posted this today on my Twitter, this exact chart where it said, this is a ticking time bomb right here. Like, this is a ticking time bomb at this moment. The S&P 500 is going to get tighter. It's going to get tighter and tighter and tighter in this wedge, and it's going to have to break the last 13-month downtrend, or it's going to have to crack the uptrend of 2023 so far. There is no way we're just going to continue to move sideways. When we go on up, if we break it, we will get a nice bull rally. And if we crack this trend line, we will be going down. So this is why I want to back up and say, while I want the market to fall so I can get a better entry, I can't say it will fall, because if it breaks that downtrend of 2022, imagine how many people are going to be excited about this type of play. So, the S&P 500, that is, what I'm honestly focused on at this moment, really just kind of taking everything back and really just looking at this daily chart. But as I said, going into the 1 minute chart here, 1 minute chart S&P 500, it's a little bit gambly. People want to buy in, then they sell, then they lose, they buy, they sell, they lose. They try to figure out every little candle. Take a couple steps back. If you need to, you can also go back to the 60-minute time frame, be able to get a little bit of better kind of look on this play. Something that we also can take a look at if you want a little bit more closer detail is, why did the market bounce at 387? Yesterday we saw a nice bounce at 387, something that I called out as well. And this was just because I'm here every single day. I love watching the S&P 500. Old resistance turns into new support. We actually had a beautiful channel pattern in a 60-minute time frame from mid-December to early January, where we had our top resistance and bottom support. And this is just a channel pattern. Top resistance 387, back down to 378. Top resistance 387, back down to 378. 387, 378. And it's back and forth until we break out. You can see we bounce off it here. We bounce off it here. Old resistance turns into new support. We start moving back on up. Let's take what we just learned from this channel pattern, up and down, up and down, up and down, until we break out and get a nice move. And let's just apply that over to our daily chart. And you can also see, of course, bounce play right here. Now we're getting a little bit more detail. And that's where you can just slowly keep adding onto your chart to be able to find support and resistance. But this is where I'm completely at in my mind.
Yeah, and I like, Sean, the way you have that wedge set up, because you're basically not saying I'm not, betting on SPY to go up or down, or I'm not super bearish or bullish. You're saying here are our levels, and we're either going to break higher or lower, like through one of these levels. And once that happens, then I'll be able to make my decision on how I want to directionally trade it, which I think is the more sound way to go about it if you are going to try to trade off charts, rather than saying, because when people just say, okay, I'm super bullish or I'm super bearish, you're going to see what you want to see in the charts, right? Like if a super bull could look at this chart and see, okay, well, we've been making...
If I was biased on this, I would get rid of this line right here. I would say, look at the higher lows that we have. I could, say, oh, next time we break through, 400, look at this ascending triangle pattern squeezing on up.
Right.
I definitely could. It's easy to be biased towards the side that you want. Then you just go on Twitter and you only read the things or listen to the things that you want to hear, so you have an excellent point there as well.
Yeah. And I think you made some great points today, Sean. It's been a pleasure to get you back on the show. Unfortunately, we are running up on time here, almost 12:30. Where can folks in our audience find more from you?
I'm live every single day over on tradecaster.com. That's where I live stream my trading. Not only do I live stream there, but we also have roughly like 10 to 12 other live streamers just like myself, that trade full time, that you could be able to watch me trade, watch others trade, and be able to join our chat and join our lobby. So, that's where I'm live every single day. And, shout out to you, Aaron. Thank you so much for reaching out, and Benzinga and Hole for being able to have me on today. So again, I really appreciate it.
Of course, Sean. Thanks again for hopping on. I'm dropping that link in the chat, tradecaster.com. We got to get you back on again soon, Sean. I know you're typically more free on Fridays, correct?
Yeah, Fridays, even sometimes during lunch hours, I'll be happy to kind of talk and, what my thoughts are. But yeah, reach out to me. Happy to be on here whenever you guys can.
Awesome. All right, Sean, well, enjoy the rest of your Friday. Have a great weekend, man.
Hey, thank you. You too.
All right, y'all, that was Sean Deckmar, tradecaster.com, to check out more from Sean and some of the other traders working with them. Sean's always, I love the energy Sean brings, right? He's going to come on, show you his charts, but really get you through it.